Today I'll be going over one of my subscribers' portfolios, giving any feedback I can, going over every position, his dividends, investing strategy, and so much more. And you, yes you, if you want me to go over your dividend portfolio, make sure to join the Discord link in the description and message me there. I'd be happy to go over it in one of these videos. And before we get on to the video, help out a small YouTuber by subscribing. It would really mean a lot. Smash the like button for the YouTube algorithm, and of course, roll the intro.
Hello, I like money.
Alright, to start off the portfolio review, I think it's important to kind of go over his situation before we start. Rezi's 18 and he's primarily investing for dividend growth right now. Me and him have very similar strategies. Essentially just invest in really good companies and let compound interest do its work with dividend growth over time. Also, he made a really nice spreadsheet, so thank you very much. So here we got the ticker, the company, how many shares he owns, the cost per share, the price of the stock right now, and the target allocation that he wants it to be part of the portfolio. Alright, to start off, we got Apple, which is he wants 10% of his portfolio. Currently owns 15.5 shares of Apple at a cost per share of $165.43. That definitely gets approval from me. I'd only like to see more dividend growth from Apple, but I'm very happy with what they're doing with share buybacks right now. Yield on cost over Apple over the long term is going to be insane if they actually grow their dividend above 5% still. Combine that with the aggressive share buybacks, Apple's going to be an amazing company to hold for the long term. Next, he owns Costco, 10% of his portfolio right now. I'd assume it's on a larger allocation right now of his portfolio because of how expensive it is, and he's probably waiting for the price to dip a bit before re-entering. Costco has amazing dividend growth, and their special dividends do kind of confuse me a little bit, I'll be honest. But Costco is definitely an amazing and unique company itself. I don't own any right now because I don't have access to fractional shares, but when Ameritrade turns into Schwab, I might actually buy some. I do think it's a little expensive right now. Costco's definitely an amazing company to have as core position in your portfolio, and I definitely approve of that. Next, he owns Canadian Pacific Railway. He wants this to make up 5% of his portfolio, and he currently owns 10.38 shares. I don't have a lot negative to say about this position, but I think personally Union Pacific's a better holding because of the dividend growth. But again, you could be investing in Tattooed Chef, so I'm definitely not going to bash you on that. I prefer UNP over CP just because of the dividend growth, and they have a higher dividend yield as well, so their dividend stats are a little better. Next, he owns Estee Lauder. I gotta be honest, I don't know anything about Estee Lauder, but you have it as 3% of your portfolio right now. I know that Joseph Carlson owns it, and that's about all I know. I think they're a cosmetics company. He owns 1.51 shares of Estee Lauder, and he has it as 3% of his portfolio allocation. I don't know enough to say whether I think it's a good holding or bad, so I'll just remain neutral on that one. Next, he owns 0.75 shares of MasterCard and wants to have that as 5% of his portfolio allocation. MasterCard's an amazing company with Visa. They are a duopoly. Definitely not against this one, but me personally, I'm all in on Visa. It definitely doesn't hurt to own them both, but me personally, I just go 10% in Visa because of how much of a strong company they are. But again, that definitely is an approved position for me. I love them in both his companies. Next, he owns 6.58 shares of Microsoft and has that as 10% of his portfolio allocation. If you're a long-time viewer on the channel, you guys know how much I love Microsoft stock. Highest quality company in the world in my opinion, and it's hard to find a flaw in their business. I'd argue to even have it as 15% of your target allocation in your portfolio, to be honest. It's that strong of a company. Currently, you have a really solid cost per share on Microsoft at $230.60. If I had more capital, I would definitely be buying Microsoft every week. If you want to help me buy some Microsoft, make sure to share the video with a friend and help me get monetized on this. Next, you own Nike, and you want to have that as 3% of your target allocation in your portfolio, and you have a cost per share of $127.48 on that. I think Nike is actually a pretty underrated dividend growth stock. They have really solid dividend growth at around 10% annually. They have amazing brand value, but I guess you could say they are a little overvalued right now. I definitely like that Nike position though. Next, you own PepsiCo, which you want to have 4% of your portfolio, and you currently own 2.53 shares. I like Pepsi as a company, and I think you could bump it up to 5 or even 10% of your portfolio. I think it's a really good company with amazing brand value. Pepsi might be a little overvalued right now, but you just might want a DCA into that position. Next, he owns SCHD, which of course you can't go wrong with. You have your target allocation for that as 10%. I'd even argue you could bump it up to 15%. I would definitely look to dollar cost average into SCHD whenever it's below your cost per share. And right now it's actually in a pretty solid dip, so I might look to add right now to that. It's hard to find a dividend ETF with the dividend yield and the dividend growth that SCHD has right now, to be honest. Next, he owns S&P Global, and he wants to have a target allocation of 10% for that. Definitely approve of that position. Amazing company over there. Next, he owns Texas Roadhouse, and he has that as 10% of his portfolio allocation right now. They just had a crazy dividend hike of 20%. It's weird. Texas Roadhouse looks like a really good stock to own right now, a really good dividend growth stock, but I've never been to a Texas Roadhouse. I actually can't eat there because I have a nut allergy. Yeah, I was the kid at the peanut-free table. I feel like if I were to actually own Texas Roadhouse, this may sound kind of stupid, but I'd actually have to go there and experience it myself. For me, my restaurants that I own right now, McDonald's and Starbucks, I've both been there before and I understand how it works, but I just don't understand Texas Roadhouse. Like, what makes them unique from other restaurant brands? I'm sure I could do some research online, but I'd have to actually like go there and see how it works. It's definitely an interesting one though. I approve of it just because of how good the financials are looking right now on the recent dividend hike. Texas Roadhouse is definitely one that I'm going to be keeping my eye on. Next, he owns Union Pacific, which takes up 5% of his portfolio allocation. I love UNP. Their stock was just up a lot because Lance Fritz said they'd be stepping down, which apparently is good. I didn't even know. He was called out by an activist investor, basically, and the activist investor claimed that he was doing a bad job with the assets that he had. And by the looks of it, he actually did pretty good. They outperformed, so it's really nice to see that they do have more potential there with a new CEO when they hire one. I would consider maybe selling CP and putting it into UNP, but if you're doing it for diversification purposes, I'm all fine with that for sure. I recently bought UNP, and I've recently been aware of how much this country really relies on railroads and how UNP's really outperformed the general market recently. Next, he owns Visa, which I think is one of the highest quality companies in the world, which is 5% of his portfolio allocation. I'd assume you're owning Visa and MasterCard for diversification purposes, but me personally, I'd go all in on Visa. But him and me, our yield on cost on Visa over the long term will be insane. And lastly, this is probably his favorite stock, which is Vici Properties. If you're in the Discord right now, you'd know that he loves this stock so much. Vici's an awesome company, and it makes up 10% of his portfolio. I'm definitely looking to add to Vici myself, and it's an amazing REIT company for growth and the yield they offer right now. He also has a growth segment of his portfolio, which we're also going to go over. To start off, he owns Adobe. Adobe's a really interesting company. It's a very strong company. It's a company I honestly don't understand that much, but I'm looking at their financials, they're very strong. Amazon, you can't really go wrong with that. They're in an interesting situation right now. Their stock has gone down a lot recently. And I think, the Amazon, the thought that they're like the big bad wolf has kind of like settled down in my opinion. Berkshire Hathaway, which is just an awesome company. It's crazy how they outperform. Salesforce, I don't really understand that one personally. I don't research them. Google, which is Alphabet. That'll be interesting to see how them and Microsoft will compete over the next decade. I think the ChatGPT threat is kind of over-exaggerated. It's kind of how like the metaverse was like a year or two ago. I think that's over-exaggerated and that Google will be fine. Netflix, this is kind of an interesting one. I'm not huge on Netflix right now. Personally, I think if people didn't have half a brain, they could realize, they could stream content some other ways, if you know what I mean. For legal reasons, that's a joke. But for entertainment and content and like streaming stocks, I'm personally in Disney. They're going to be paying out a dividend at the other half of this year. They've been a mismanaged company over the last 3 years and have amazing assets that you simply cannot compete with. And then he owns VTI, Microsoft, and Apple, as I mentioned earlier and talked about earlier. Now, this is the pretty cool part. This is income pie and dividend growth, yield on cost income scenarios. We can see right now that Vici makes up a really good part of his dividend income simply because it's the highest yielding part of his portfolio. A lot of his stocks are more lower yield, higher dividend growth, which there's nothing wrong with whatsoever. But Vici's making up a really solid 38.5% of that. Then you got SCHD making up 20% of that. Union Pacific at 8.7, Microsoft 6.1, Apple 4.8, Pepsi 4.4. Right now, he's currently making $294 in dividend income, but if he kept investing at a 12% annual growth rate, you could see here as he keeps growing in 2028, 4.2 thousand, 2033, 11.2 thousand in dividends. This just shows the power of long-term dividend investing and really just the power of dividend growth overall. A lot of the companies that he owns are high dividend growers as well, so it's going to be really nice to see over the long term yield on cost and compound interest do its work. Something I noticed in the portfolio also, there's not a lot of high yielders, so I think it might be interesting looking at maybe some high yielders like maybe Coke or even Altria. Maybe do that, reinvest the dividends in that for a few years, and then you could sell that off and put it into some some higher growth positions, or you can just take the dividends let alone and put them into some of your higher growth positions as well. And lastly, here's just a chart of his diversification and his growth rates. So you can see in no time he's going to be doing really well with these dividends. Also, just really good diversifications on the sectors as well. And that, my friends, is the end of the portfolio. So here are my thoughts on the portfolio. I think it's a really good dividend growth portfolio overall. I do think that you have a room for a higher yielder stock or two. It's honestly hard to find anything really wrong with this portfolio. The only thing I also could mention, I noticed a lot of these stocks are very similar to Joseph Carlson's portfolio. And this is for everybody watching as well. This isn't just towards Resi, but don't like fanboy over YouTubers. This is a mistake that I've made in the past, AT&T, Intel, etc. Be patient and, take time when you see a YouTuber buy a stock. Do your own research. A lot of these stocks are just really high quality companies, so I can't trash on them at all. But overall, that's it. Really good portfolio. Probably one of the best that I've done on the channel so far. If you want to see me review your portfolio, again, join the Discord link in the description and message me there. I want to thank you for making it to the end of the video. It really means a lot to me. Smash the like button. Again, thank you so much to Resi for letting me go over. He also made this awesome graphic and my YouTube banner and all that good stuff. Thank you so much. Smash the like button, subscribe, and of course, do dividend stocks, not drugs. Have a great one.